Welcome back to another trade recap. Today is March the 6th. End up taking two losses on Tesla today towards the downside. Really tough markets here. No continuation, which we've understood that's been the case for the past 3 weeks, but still looking for some continuation trades when I shouldn't be, and I'm essentially paying the price. So let's hop right into my trading statistics for this week. As you can see right here, I'm only up $3,000 for the week, giving most of my gains back. So Monday, Tuesday were fairly solid. Wednesday, I didn't take any trades. This was actually the best day to trade for continuation towards the upside. Unfortunate, my power did go out. So a little bit frustrating. Could have ended up taking that Tesla trade towards the upside yesterday. Palantir trade along with AMD. Ended up taking Palantir towards the upside. Small win on that one. AMD loss on that one. And then, of course, the two trades on Tesla today, putting me down about $8,000 for the day. And for the week, I'm about $3,000. So it's been a tricky past couple of weeks. Overall, year-to-date P&L is absolutely fantastic. As for the last month, I'd say, has been fairly stagnant, very slow growth compared to, of course, the first month and the start of February. A lot more mean reversions, and I'm still looking for continuations, even though the Qs, of course, is still stuck inside of the range. Let's go into exactly the thought process coming to today here and some of the trades I end up taking. So the trades that I ended up taking were on Tesla. Looking back, not good setups. I was looking for the 5 minute basically opening range low with, of course, our order block. I was trying to short here, a couple nice rejections, but buyers just kept on stepping in off our previous day highs. I wanted to see that gap fill. I ended up stopping out prematurely on the first trade. So during this day, I should have only, I executed poorly. I should have only taken one loss on this day, but I ended up taking two. So I ended up taking Tesla, stopping out on this wick, and then look to re-enter. And then as you can see, buyers stepped in, knew I was wrong immediately, so I ended up cutting it. So pretty big loss for me today, putting me down about $8,000. As I mentioned, on the week, I'm only up $3,000. Not really a video I wanted to make, of course, but here we are. I'm going to show you, of course, the wins and the losses as usual. For the key levels, let's kind of just go into the thought process coming into market open here. Really for today, I was looking for continuation, essentially previous day low retest. That was my key level, right? We had the non-farm enrollment change, markets reacting right off the news. Underneath previous day lows, I want to see your previous day low rejection, but really SPY and Qs never came up and towards that previous day lows. And we end up just kind of staying heavy, and we're actually already at key levels of support. So coming into market open, the QQQ along with the SPY, we're already at key levels of support here on the higher time frames. Right? If we go back into the SPY was already at our 670. So it doesn't make too much sense to short here off that 670. It will make a lot more sense to short off our previous day lows, or of course shorts now underneath their 670. Right? Shorting into 670 is not really the greatest idea. Same thing with the Qs here. Key levels I had marked out was our 599. So trying to short into this 599 was just very difficult. No reason to kind of short into that 599. I was looking for, of course, shorts underneath, which ultimately didn't work, right? Because buyers were defending essentially this 599. Same thing with the SPY. As for Tesla, what was I really looking for? The hold underneath our 396. But if you kind of zoom out here, it doesn't make too much sense. We're kind of just trying to short right down in towards kind of that previous day lows. Wanted to see a little bit more, but of course, right, mean reversion, plus we had that gap fill back towards the upside. But yeah, not really too much to say. This week, as I mentioned, have been fairly difficult. Let me just kind of pull up some of my TradeZilla statistics that I do have here. So as you can see, these are my trading statistics for the month of March so far. $3,000, 50% win rate, 1.34 profit factor, 50% day win percentage, along with the average win to loss ratio of 1.34. So as you can see, fairly flat if you look at the past 30-day P&L, right? Slow growth here as well, up about 64,000 in the past 30 days. A lot of it, as you can see right here, first week of February was fairly solid, but ever since then, we've had a fairly stagnant growth. Right? If you go from the 9th of February all the way to the 6th, I'm up only $34,000 in the past about 20 to 30 sessions. You can see my P&L graph is a lot more stagnant. just because there's been a lot more mean reversions, a lot more continuation. You can see the statistics look a lot more average now. 50% win rate, 1.66% profit factor, win-loss ratio 1.42, which is still fairly solid over the long term, but definitely with the market slowing down here, it's been very difficult. So what my game plan is, of course, is to wait for that range break on the Qs. If I go back onto the QQQ, of course, you can see we've just been ranging here on the daily time frame. So really no reason to, right, try and look for continuation, right, be a lot more defensive during these times until we can finally break outside the range, of course. Before then, right, we just want to be looking for, right, bounces off key levels of support, rejections off resistance. And yeah, that's going to be it for me today. Super short recap, just kind of recapping my week. Overall, it's been tough out there, so don't beat yourself up if you have been losing. We are going to get some nice continuation here very soon, hopefully. With that being said, I'll see you guys all next week for a brand new video. Peace.